Hello, my name is Eric Martel and welcome back to another episode of Break Away from the Rat Race. And today we're going to calculate our monthly passive income target. In the previous video, we talked about why your number one goal should be to achieve financial freedom. And we talked about financial experts out there, how they're giving us this huge target savings in order for us to retire relatively comfortably. There's a number of problems with that, and I explain what the problems are. And the big problem is that it's hard to get motivated to save that huge amount of money. It's also hard to track your progress. And this is why today we're going to calculate a monthly passive income target. That will make it easy to track our progress. And it's also something that the number that's going to make a lot more sense to everybody. And it's going to make it more, more tangible and something that you can really work towards and get motivated to achieve it. So that's what we're going to do today. So calculate that monthly passive income target. So there's a bunch of retirement calculators out there, and basically when you plug your numbers in there, it's pretty sophisticated calculators. So no questions about that. But the end result, because of the underlying assumptions how these calculators are built, you end up in a situation where you have a certain amount of income that you want to have at retirement, and then it's going to say you don't have enough money. It's almost guaranteed you don't have enough money. So what's going to happen is that they're going to say, well, you need to save more today. So or the other option is that you need to cut your expenses at retirement, right? Nobody wants to do that, especially when you hit retirement. The last thing you want to think about is that, oh yeah, I want to live less now. So this is what I call the compromise. Live less now, live less later, but no matter what, you're going to live less. And I don't think that compromise is a necessary evil. You don't need to do this. And I'm hoping that once you calculate your monthly passive income target, you're going to come to realize that this is very feasible to achieve this, and that you can make progress towards that today. And there's also additional benefits depending on the type of investment you choose to do this. So let's talk about that. The retirement expenses, the living expenses at retirement. What does that look like? A lot of people are talking about, are suggesting that you're going to need less at retirement. I think it is true that you're going to need less in some category. So going to work, you're going to spend less money on that because you're not going to work. You're not going to spend money at lunch with coworkers because you're not working with them. But I think on the other hand, you're going to spend more time, going for lunch with your friends that are also retired. You're going to do more activities. You're going to play tennis. You're going to do all kinds of different activities. So these expenses are going to go up. You get used to a certain lifestyle, and then when you hit retirement, you don't want to. Your lifestyle is gonna change, but it's not gonna change dramatically, and it's not gonna change downward. So even if you go and move out of the San Francisco Bay Area, for example, and you go somewhere cheaper, you're gonna save a lot of money on your property or your living expenses, but you probably want to spend that money on traveling more or doing some other activity. So in general, I would assume that you're going to stay with the same level of expenses. All right. With that said, we're going to assume that in the number one, so take a piece of paper, and really the first thing that you're going to do, the first line is going to be kind of what are your current monthly expenses? Just ballpark figure here. Notice that we're not talking about income, how much income you're making. We're just going to talk about the expenses because this is what you need to do. And then once you have that number, on line 2, add about 5 or 10% of that amount just as a safety net. In case you have an accident, you have to pay a deductible, or in case you have a major repair, or you need to buy a fridge or something like that, then you have some money set aside for that eventuality. Then you add the line 1 and 2 together, and you end up with your total monthly income target, right? So Next thing is that we talked about employers, non-401k employer-sponsored retirement plan. So if you have one of those, so these are going to kick in at retirement, obviously. So if you want one of those, then calculate what that benefit will be, what that pension will be at retirement. So often it's like a certain percentage times your final average salary times the number of years of service. So you can calculate that. You can look at your pension plan. Like if you're like most people, you don't have that. Most people, the employer provided a 401k plan, so that doesn't count. So this is your employer sponsored a non-401k retirement plan, non-IRA. So this is what that is. So it's a defined benefit plan. So you're going to put that on line number 4. So that's going to be a negative here because we're going to take, because we don't have to, we're going to take it away from our the monthly income target because that's going to come in automatically. Next thing is this Social Security. Social Security, you can actually go on ssa.gov/my statement, and then you can go and you enter all your information. It tells you how much pension you can expect at retirement. So take that number and then write that down. That's also going to be a negative. Then you take line 3, you subtract line 4 and line 5, and then you're going to end up with your monthly income target. All right, so this is what you need to somehow figure out how to generate passive income to reach that monthly income target. So let's talk about some numbers, right? So let's give you an example. Let's say that my monthly expenses are $9,000 a month. And then I add on, so that's going to be my line number 1. Line number 2, I'm going to add 10%. So 10% is about $900. I'm going to add $1,000. So line number 3, the sum of these two is going to be $10,000, right? I don't have a non-401k employer-sponsored pension plan, so that's going to be 0. Social Security, let's say $2,000 in that. So that means that when I take my $10,000 minus my $2,000 in Social Security benefit, my monthly income target is $8,000 a month. So this is how much passive income I need to generate in order to retire, with the same lifestyle that I have today. Now, how do I achieve that particular target, that monthly passive income target? So I have that $8,000 number that we talked about. So there are single family rental properties that you can get. So that's a good way to get started if you want to get started like one at a time and stuff like that. If you already have a pool of money, there might be some other strategies that you can do. But my company, Martel Turnkey, that you can see on martelturnkey.com, there are other companies out there, and I'm happy to tell you what they are. These companies also are what we call turnkey rental providers. So they're going to sell you a property that has a tenant in them that's been all fixed up and that will generate passive income. So I'm just going to talk about the properties that I know, and one of the markets that we are in is Cleveland, Ohio. And so the properties that we sell there, they are about $80,000, let's say, as an average. And the rent for that property is between $750 to $800. And once you pay your operating expenses, once you pay your property management company, and once you pay your mortgage, you would be left with about $250 in net cash flow, right? So you've paid all your expenses and you're left with $250. To get that $250, you had to put a down payment, right, of 20%, let's say. So that's on $80,000, that's $16,000 down payment. So that $16,000 gives you that $250 in net cash flow per month, right? At retirement, we can assume, I'm just going to make a couple of assumptions here. It doesn't have to be that way, but $250 at retirement, the mortgage is going to be paid off, let's say, and then you can, instead of making $250 a month in positive cash flow, you would be making $500 a month, right? Let's just assume that. That's normally when you look at the mortgage payment and you look at the cash flow and all of that, that turns out to be about the right number. Of course, it depends on how close you are to retirement. So then you may have a different strategy there. But if you have any question or any specific situation, feel free to contact me and I can help you kind of work those out. Right? So let's take that $500 a month. So one house gives me $500 a month. So how many houses do I need? And then you can take your numbers, but if I take my numbers of $8,000, then I would divide it by $500, and that's going to give me the number of houses that I need to buy in order to retire with the same lifestyle that I have today. And that number, 8,000 divided by 500, is 16 houses. That's it, 16 houses. And then I'm able to generate passive income that is going to be, I'll be able to retire on, and I wouldn't have to worry about too many things. If I want to be a little bit safer, I already added 5-10% and safety net. I can put like 16 or 18 or 20 houses instead to be a little bit safer, right? But I've already added 10% safety net on my number. So I'm pretty confident that with only 16 houses, I can generate my $8,000 in passive income at retirement. It's that simple. Does that sound achievable? This is something that you can start working on today, instead of having this big, massive target of savings in your 401k and stuff like that. So if you have some money in 401k, some money that's saved up in other things, if you have equity in the house, all these things can be used to buy a rental property and then start getting your positive cash flow. And on top of that, there are additional benefits to having a rental property. There's tax benefits, obviously, and there's also appreciation that is also something that is very good in the long run, right? Because as your property appreciate, that's also going to give more value at retirement, and also for your legacy if you have children and grandchildren and stuff like that. So I hope this was helpful. If you have any questions, comments, feel free to contact me. Make sure you like this video and subscribe to my channel. I would really appreciate it. And I try to do videos on a weekly basis. So I hope this is helpful. If there's anything you want me to talk about, feel free to contact me as well. So again, thank you very much. Have a good day. Talk to you later. Bye.
Thank you for listening to Break Away from the Rat Race with your host, Eric Martel. If you want to share your story and experience with our listeners, please message us on Facebook at Break Away from the Rat Race. Also, please subscribe to our YouTube channel and our podcast on iTunes.